Welcome to Commonwealth Works, where today we're going to be discussing restoring ownership through a land value tax. We're going to discuss the tax system inefficiencies that exist under our current system of primarily income and corporate taxes. We're going to discuss the Georgism principles of LVT. I want to go through a $25,000 exemption that shifts the burden from small holders to large holders. This is something that makes LVT more consistent with the distributionist framework. And we're going to talk about what implementation would look like as far as revenue and tax rate. And then we're going to go through different ways that we might be able to evaluate a home value. Income taxes create a deadweight loss because they tax productive behaviors. So productive behaviors would be the use of capital and or the use of labor. Those are the activities that produce new goods in the economy. A land value tax values the unproductive parts of capital. So this produces this means that there's no deadweight loss. There's no loss to the taxation. It also encourages an efficient allocation of land use, meaning that land will be used for its most valuable purpose, which the income taxes don't encourage any specific behaviors. One of the ways we attempt to make income tax more efficient is by having progressive taxes. Progressive taxes mean that as the income of the individual goes up, the taxes paid by that individual also go up. This produces a reduction in the amount of labor that people are willing to do, especially at the margin. So if your income is already well enough for you to meet your goals, because you're going to lose 30% of the next increment of it, you're less likely to do that increment. It reduces production overall. There's evidence that it cuts GDP by 1 to 2%. So it's not a catastrophic problem, but it is another issue with the land value. Sorry, it's another issue with the income tax that's addressed by moving to a land value tax. So increase in land value driven by community growth, public infrastructure, and neighborhood improvements are the unearned part of the value of a property. So this value is just from someone just having the property, owning it. They could have inherited it. They could have just lived in the location for a long time. It's the main cause of speculation. The unearned increment can make up 70% of the value in urban areas. So if you have a house in an inner suburb, in many cities, it could be the value of that house is not the value to rebuild the house or the value of the capital of the house as it exists now. It's the value of the land that you did not create. So this is how you would value the land in a land value tax. You'd take the median value of the land in the area for a standard to create a standardized assessment. So you would take a few properties and do very, very intense analysis on what is the value of the land, what is the value of the property. This is going to eliminate, and then you use that to generate a formula that you would use to evaluate properties. So you'd use things like the volume of the volume of the property internally, so the floor to ceiling heights, the square footage of the home, the amount of unfinished and finished space, and then use those to calculate. You'd use those to estimate the value of the home, then subtract that from the total value of the property, which is known from sales or assessments, and then that's how you would evaluate homes for what part of it is taxable under the land value tax. This is going to mean that higher valued properties are going to have lower property valuation. Sorry, they're going to have higher land value valuations, and cheaper properties will have lower land value. Will have a lower land value valuation. So a large home that's valued quite low will have a very low land value. This is going to mean, though, that it's going to be very predictable for your taxes by using this equation method versus a highly variable per location assessment. This would still require some sort of general property assessment though. So you're going to take the assessed total property value, then the assessed value of the structure, subtract that from the total property value, and that gives you your taxable land value. So this is contributing to what causes valuations to go up. So if your home is near places to work or transit or other amenities that are valuable, that's going to increase the cost of the home without how the homeowner didn't create that value. High quality schools are another thing, again, that's not created by the homeowner, but it increases the home value. So these are the ways that you get value from when you buy a home that you did not earn, that were not created by the person you bought the house from. That's just the land value. So here's the equation for how we would assess a home. It's land value equals property value minus the built value. The built value is the value of the any structures on the land. So in the most common case of a home, it would be the value of the home and the driveway and the sheds or the trees that were planted on the land, things like that would all be, those are all built decided value. And then the revenue that would be produced from the house, or the amount of tax, would be equal to the tax rate times the land value that was determined by the built value minus the property value. If it's not super complicated, but if feel free to pause and look at these equations. Here's an example calculation. If the property value was $500,000, the built value would is calculated at $350,000. You subtract that, and then we had a tax rate of 1.5%. We'd take the $500,000 property value, subtract the built value of 350,000, giving us 150,000. Then we times that by our rate of 15%. It'd be $2,250 dollars would be the amount paid by that household. So smallholder exemptions, this is a means by which to make sure a smallholder, someone with a reasonable property that is appropriate for their family, is not going to be taxed out of their home. So each resident that's living in the home that is owned by the household would receive that $25,000 exemption. So if you had a family of four, it's $100,000. If you're single in a home, it's $25,000. So the larger your household size, the larger your home, the more valuable your property can be that is tax exempt. The goal of this is to ensure that the tax burden is lying on those that are using the resource more intensely. So if you have a larger family, you're using your home more intensely than if you're a single person in a larger home. This means incentivizes people, once their family gets smaller, to sell their home to get into a smaller home that's more appropriate to their family size. This means that if you have a large home, if you have a large home with a large built value as well, it means that you might end up paying no tax, depending on the overall valuation of your home. So example, smallholder would be, if we, again, we had a family of four, if the property value was 360,000, the built value was 200,000, then the land value would be 160,000 with the same equation we went over earlier. The exemption would be 100,000, so the taxable land value would be $60,000. At a 10% tax rate, the taxes owned would be $6,000. So the big advantage here is people who are holding land without producing on it, they're the ones being taxed. So this encourages people to sell land so that they won't be taxed on holding that land. It discourages people from, again, from hoarding land. If someone's speculating, expecting that the value of land will go up, then it encourages someone to develop that land while they're doing that. It is aligned with the idea that there's rents that are unearned in the economy and we're taxing them. So due to the smallholder exemption we talked about before, that's going to eliminate most of the tax burden on those small holders. So a family that has a inexpensive home, So let's say a $300,000 home with a built value of $200,000, they would pay no taxes. A speculators that have that same home will have to pay taxes on the full land value because there's no resident smallholder owning the home. It creates a safety net for the smallholders and homeowners. So here's bottom line up front for this is a pretty high land value tax with a very conservative valuation of land value in the United States. This is what it would take to replace all federal revenue. This isn't actually the recommended policy. We'll go over some different policy scenarios. This is something that would likely result in the evisceration of current land values, causing homes to crash down to their built value only. Now, that sounds that would be a something that would be a benefit long term. It's going to reduce the revenue that we'd get from this tax greatly, and it would also result in a lot of short-term difficulties. So here's two different scenarios explaining the one that we just had before, and here's a revenue maximizing rate. So this rate is one that would likely result in a significantly lower reduction in land values if we went with this 5 to 6% rate. It would not fully replace all federal revenue, but it would be able to replace about half the federal revenue. So this is designed, again, it's designed to specifically reach the level that would not eliminate all land speculation or holding or investment in land. That's what that 5 to 6% rate. So if the land speculation was still sufficiently lucrative, the land value was shooting up, this would still apply. It would still be potentially viable to hoard that land. But the revenue from that hoarding would be offset by it being taxed away. So with any large change in policy in a country, it's recommended that you go through some sort of transition. Uh, Generally, an 8 to 12 year transition period is what's recommended. I'm recommending a 10-year. So during this period, reductions in other taxes that would be offset by the revenues gained from the LVT would be lowered as the LVT is being phased in. So it would be a gradual adding of the LVT and a reduction in the other taxes. So the goal here is to, again, reduce the incentives for hoarding. So this is going to mean that it's going to, we have equitable taxation, we have broad ownership. And ultimately, if we could eliminate the federal income tax, that would be also ideal. It's aligned, and so it's aligned with sustainability as well, because if you're a homeowner that owns your home specifically, you have an incentive to maintain it. If another thing, this is going to encourage more vibrant cities because it's going to encourage more multifamily homes that are more sustainable. The Because the more units are in a home, the less it costs to heat and cool and et cetera, the more shared services in the building, meaning like a shared foundation and things like that make this type of living much more sustainable. So here's just a breakdown of the different parts of land value that we have. These are fairly rough. They're not exact, and they're based on estimates that vary quite a bit. So most of the land value in the country is residential. There's also agricultural and commercial industrial. So the exemptions, because residential is the largest component of land value, and the majority of homes are owned by families, the exemption would would be largest affecting on the residential. It doesn't affect the other two categories at all. So it's something that's going to reduce the amount of taxable land by 15 to 20% in that residential sector. So the sources of the data. These are how economic justice would be encouraged by these policies. Shift taxes off work and investment, capture land rents to broaden ownership, encourages urban renewal, which encourages more vibrant and sustainable living. Stable revenues because land values don't vacillate as quickly as other types of labor. Because if land values typically at most go down 15 to 20%, so the tax revenue would at most go down 15 to 20%, and that's in a given area. Nationally, they don't generally go down nearly that much. Versus by taxing labor, large layoffs can rapidly happen, which means the tax base rapidly decreases because the number of people working goes down very quickly. So you get this sharp reduction in revenue. Next actions would be to phase in a national land value tax, modern assessment to create the assessment processes. That's something else with the phase in. You can figure out how people are gaming the system and how well the assessments are working to determine how well the system is going to work. So as you're phasing it out, you can refine those processes. If you went straight to the full amount, you would likely be caught up endlessly in legal issues trying to phase in the process. Thank you. This has been Commonwealth Works. I'm Joey. Have a wonderful day.